Tackle today, Matt and Mark Justice bringing you all of the charts, economic data, CPI report today, all of the analysis so you can start your day in an informed manner. CPI data came out this morning, Matt. Let's not bury the lead. CPI data come out today, and we'll give you the specific numbers here in a minute. But needless to say, we've been having a debate, Matt. Are we going to get 50 basis point? Are we going to get 25 basis point? That was kind of decided. Market's pricing in now just one cut next week when the Fed does their meeting because core CPI was a little bit hot.
Yeah, CPI came in kind of right in line with where the expectations were here today with CPI rising 0.2%. That was kind of exactly where that expectation was, right at that 0.2%. On the year-over-year numbers, they did come in line at 2.5 versus 2.5. Last month was 2.9. I felt like the market was kind of pricing in the inflationary side of the conversation here with a little bit of a reprieve. On the flip side, core CPI, and when you're looking at core CPI, this excludes the food and the energy side of the equation. That actually saw a slight beat at the 0.3 versus the 0.2. And when you are looking at core, you see that core go up over the last 2 months, and you're a little bit concerned about core. And when you are looking at kind of those concerning elements of the inflationary side right now, and again, this is a pretty decent number for the central bank that's going in to a cutting cycle. And I'm not talking about the core. I am talking about the CPI itself, as well as those year-over-year numbers. But when you are looking at that core, where the concern is for the market here is shelter rose 0.5% month over month. It's up 5.2% year over year as well. When you're looking at apparel outpaced it at 0.3%. Motor vehicle insurance, which has been a big concern for Americans, that rose 0.6%, and that's up a whopping 16.5% year over year. Hospital and related services rose 0.4%, up 5.8% year over year. And airline fares, which have been downtrending over the course of the last 3-4 months, that actually showed a bump up by 3.9% in August after it did trail for the last 5 months. And so it was a decent number for the central bank. I'm not sure it was a decent number for the market here because it's a little bit of a mixed report in general. I think in terms of the market response here today, it has been an interesting market response here today. Obviously, we're talking about some fairly aggressive downward movements in price. In the S&P 500, what caught my attention was twofold. Number one, when you look at the actual report that came out, you saw an initial surge to the downside before it immediately started recovering, Mark. And so the CPI report actually started recovering and actually got above its price before the CPI report, before the cash open. But then the cash open came out here, and the market and the traders and the investors just threw a little bit of a temper tantrum on that cash open. And that is 3 out of the last 4 cash opens that we've had a negative move to the downside. And so it just tells me a little bit that the market maybe not be moving specifically on that CPI number, but in general, we're still dealing with a little bit of concerning elements here in the market as we're digesting this rough start to September. Number one, I think the market's thrown a little bit of a downward spiral here, given the fact that the probability shifted today to a
and Matt, I think
aggressively to a 0.25.
Yeah, I mean, that was the first place my eyes went this morning. So I saw the raw data. I was like, what are rate cut odds? And you were as high as a coin flip a week ago. Mm-hmm. You were 34% coming into the CPI report. That dropped as low as 11%, kind of in that 13 to 15% range as we're doing this video right now. For market, that is basically saying we're only getting one cut next week, everyone. We're only getting one cut next week.
Yeah, and so I do think there's a little bit of repricing going on here with the cash open and the negative cash open. That's number one. Number two, you also hit the 9 EMA for the first time in this downward movement in price in September. And when you're talking about the 9 EMA, I cannot I talk about this all the time, Mark. I whenever the price is underneath the 9 EMA, I always say you can't fight the 9 EMA. Don't fight the 9 EMA. have work with the 9 EMA, and it's a mixed market environment, so you're going to have to be a little bit patient. But the 9 EMA just played a little bit of a role here today as well, and so I do think that's playing a little bit of a role here with the bearish retracement coming into the 9 EMA, or the short-term pullback coming into the 9 EMA. And then obviously we're still dealing with a little bit of September volatility, and from that first day in September, I mean, we've simply the simple reality, Mark, is we've had most cash opens down, and 3 out of the last 4 cash opens have also been down. And so there's things we certainly need to see change, and those things we absolutely need to see change. We're going to be talking about those things with our community and the Traders Report, Traders Lounge later on today. So if you're not a pro member, come join us at Tackle Trading and hang out with us every single day in the Traders Lounge, where we dial these conversations into some detail instead of just giving a technical update in a 10-minute video.
Yeah, I know our message in the Traders Lounge has been one of caution, volatility playbook. Let's see how this plays out. Listen, it is a community you want to be a part of. I'll give you a pitch on that later on the day. So we've covered the economic news, CPI. The top story, obviously, one cut coming next week, not two. But there's some individual stocks in the news. If this was 3 or 4 years ago, I don't even know if you have GameStop today. Before I made that joke, I should have probably asked if you did. I know that GameStop had earnings. I don't even know if that's one of the 3 stocks you have today.
It is one of the 3 stocks.
Okay, there we go.
Yes, it certainly is one of those 3 stocks I do have.
Okay, it is. There we go.
It was a slow news day. It was a slow news day from the stock side of the equation. We're talking about the CPI report. That's a major economic report. You had the debate last night. There's a lot of information coming into the market here today, and so not a lot of stocks in the news. But GameStop earnings report certainly did make that. GameStop, I'm a little bit concerned about GameStop in terms of their earnings analysis here. They did come out with a beat 1 cent against a negative 1 cent expectation. So that is a positive when a company is expecting a negative on the EPS and they do come in with a positive. Usually the market does appreciate that. Not so much here today, as they did come in with a miss against the revenue handle. And Mark, they also decided to issue another 20 million shares, which GameStop has been doing quite a bit of recently. Liquid just kind of putting more and more shares out there to the marketplace. So we'll be taking a look at their technical side in equation in just 1 second. But in my estimation, I thought that was a miss in terms of offering more shares. I'd like to get into the head of the GameStop management to try to understand exactly what their game plan is there, because I don't understand it, quite frankly. Outside of that, you also had a couple other earnings as well. But in the stocks in the news, Viking Therapeutics got an upgrade, or not an upgrade, but they got an initiating of coverage to an overweight rating and an $80 price target. That's on Vikings Therapeutics. Williams-Sonoma also got an upgrade out of Jefferies, as they were basically talking about optimism and hidden value and potential gains out of a modest housing market recovery. And they were talking about Williams-Sonoma being in a position to really benefit in that type of situation. When you're looking at this from a technical perspective, GameStop just a little bit of a gap down, and now you're fighting a really important support level right around the 200-day moving average. That previous pivot point right there at about 1840, that was also the pivot point against that massive volatility spike in May, if you'll remember the Roaring Kitty nonsense. Well, you're right back at that level there around that 1830. A violation there would not be a good look. So keep an eye on that 1830 and the combination 200-day moving average on GameStop as a support level. When you're looking at Vikings Therapeutics here, a little bit of an M formation off there initiating a coverage. And so if you're looking at Viking here today, I would definitely need to see a heck of a lot more than an M formation at the top end of an IPO release. And so I would say put it on reversal watch list if that's your thing, but you're just a tough look from a technical perspective with that M formation on top. And then on Williams-Sonoma here, excuse me, not WDSM, that would be WSM, Williams-Sonoma. A little bit of a different technical saga, as they do get the upgrade out of Jefferies, and they're fighting a little bit of that 200-day moving average here, a little bit of a just consolidation. You certainly would like to see those moving averages, the 50 specifically, get tested. But outside of that, that's all I got for stocks in the news today on a slow news day following the release of the biggest economic report of the week here, and that is the CPI report.
Yeah, dollar continuing to show a developing pattern as we head into analyzing commodities. This is something that we've highlighted as an important macro chart for several trading sessions now. Went down a little bit last night, but has recovered on the core CPI number, dollar telling the truth, right? As far as what is the Fed going to do, economic strength. This is a good look. Like, this is, you might not want it to be a good
If it
look.
was a stock, you'd like it. There's no
I
doubt
would,
about it.
I would already have sold a naked put. I
And I would be dialing in that 101.94 breakout channel there. Keep an eye on the multiple time frame. You two got the 9 EMA screaming down. To me, this is just an understanding of the strength of the support level more than anything. And I think that's what is dictating a lot of the price action coming into the dollar, and the interpretation of the dollar is the simple reality is that you have massive, massive support underneath the price action right there around $1 or 100. You also, the 101, kind of that 200 weekly moving average right there as well. When you look at the weekly chart, you can really see what I'm talking about. And so I do think you're seeing a support level play out. And at the end of the day, I would see this as a deeper retracement against the previous bearish downtrend. And so I do think you're going to be looking at a little bit more upward movement in price in the dollar. And if you are going to look at a little bit more upward movement in price on the dollar, in the rest of the commodity space, you're probably going to see either capped pricing or you're going to see a little bit of volatility here. Gold, nonetheless, despite what the dollar does, in a raging bearish downtrend, gold did nothing. In a reversal pattern, gold on the dollar, gold has done nothing. Gold doesn't want to do nothing. We don't get to pick when a stock or a commodity or a currency wants to break out. You just get to pick the level. And right here, you got this line right there around the 2560, 2561 with the top shelf at 2570. A breakout there would be not only tradable, a breakout there would look really, really good. The 9 EMA on the weekly chart has caught up due to the consolidation. That's interesting to me, but just always impressed with gold, just kind of saying, we don't care what's happening in the market. We don't care what's happening in the dollar. We don't care what's happening in the economy. We don't care what you're talking about from a geopolitical perspective, because every single conversation you guys have, I just like gold more. Maybe I'm not speaking for all the gold bugs out there, but that's kind of how I see the environment. When you look at silver, I like the 28 handle, but you got to see confirmation when you're talking about reversal type scenarios. And I'm really tracking that as a symmetrical triangle as of right now, which means I have to see a break from a technical perspective on that symmetrical triangle. Copper showing a little bit of hesitation here today, but also kind of stuck in mud between 4 and really kind of that 50 period moving average, which is currently at 421. On the crude oil side of the equation here, Chucky, here today, crude oil.
Hey, you're not down 7% in a day.
Well, my hypothetical W I drew from yesterday is still in line here.
I honestly think that this is how this plays out.
And it might.
And the nice thing, Matt, is for most traders, if it plays out this way, you got like 4 or 5 weeks.
Listen, and that's why I could care less if it plays out that way, because that's what it has to do for me to get any degree of interest in crude oil, any degree of interest in energy from a trader's perspective. You're going to have to see this bottom out unless you're looking at a low base and a potential short position. But Mark, you still have momentum despite the slowing candle. You still have momentum to the downside here. Histogram on MACD continues to separate, continues to show momentum to the downside. You have not seen slowing momentum yet, and until you see slowing momentum in candle, you can't even start talking about a pivot point. And so a little bit concerning in my estimation. And maybe it does form that W formation. Maybe that is exactly what we're talking about. And maybe we're talking about more volatility to the downside, because crude oil does not care what you draw. It does not care what you need, does not care about any degree of analysis. It beats to his own drum right now.
Yeah, listen, we are going to break down the analysis, portfolio protection measures, what to do with individual positions, covered calls, everything in the Traders Lounge today as we walk our community through this little period of volatility we're having in the market right now. It's an amazing community. Go to tackletrading.com, sign up for a 15-day free trial, see what it's all about.